Hello there, you're watching Bizworld. Prime Minister Datuk Seri Anwar Ibrahim said China is open to Malaysia's proposal to form an Asian monetary fund to cut the dominance of the US dollar. He proposed setting up the fund at the Bao Forum in Hainan last week, stressing the need to reduce reliance on the dollar or the International Monetary Fund.
Bila ada pertemuan dengan Presiden Xi Jinping, dia terus sebut. Dia kata saya rujuk cadangan Anwar mengenai Asian Financial Monetary Fund dan dia akan sambut untuk membincangkan. Cadangan tentang tabung kewangan benar. Tak ada sebab mengapa negara seperti Malaysia terus bergantung kepada dolar.
The Prime Minister said he had initially mooted forming the monetary fund during his first stint as the Finance Minister in the 1990s. However, it did not gain traction as the greenback was still seen as strong. Bank Negara is already working to enable both nations to negotiate on trade matters using the ringgit and yuan. Meanwhile, Datuk Seri Anwar stated all ministries and departments must enhance the infrastructure and human resource skills to reap the benefits of foreign direct investments into the country. The Prime Minister said otherwise, the locals will lose out on highly skilled opportunities, transfer of technology and specialised trainings.
Amazon, AWS akan sampai ke sini. Bila saya lihat umpamanya keperluan mereka, nampak tahap kemahiran kepakaran tertinggi itu tidak terdapat, ada bukan maksudnya tidak terdapat, sedikit sekali keupayaan daripada anak kita. Jadi kita terpaksa kenal pasti ya program ini, dan sebab itulah Kementerian Kewangan harus bantu menyelaraskan, mengetahui apa bidang yang kurang, dan kalau perlu kita ada peruntukan khas tambahan untuk memberi latihan intensif.
Speaking at the Finance Ministry's monthly gathering earlier today, the Premier stressed this issue has to be monitored and taken swift action. He also said that the 25.5 billion ringgit investments by Amazon Web Services and 170 billion ringgit by China in Malaysia has a snowball effect, with many countries showing interest in investing here. Public Investment Bank expects to see the potential capital inflow from China, benefiting the high-tech manufacturing sector, followed by a digital economy. This could potentially lead to the growth of non-residential industrial buildings, including electrical and electronic factories, and special trades from the 170 billion ringgit investment from China. The firm also expects activities to pick up in second half of this year onwards, in addition to the rollout of MRT3. This coupled with the expediting of public infrastructure projects in East Malaysia. Previously, Prime Minister Datuk Seri Anwar Ibrahim yielded 170 billion ringgit worth of investments from his visit to China over the weekend. The 4-day official visit witnessed the signing of 19 MOUs between Chinese and Malaysia companies. The government will intensify efforts to attract quality investments and improve the business ecosystem in underdeveloped regions or states. According to the Economy Ministry, the Strategic Development Programme will be implemented through initiatives driven by the state governments and projects led by the private sector. It added that the government is committed to distributing at least 50% of the total basic development allocation to the 6 underdeveloped states, namely Perlis, Kedah, Terengganu, Kelantan, Sabah and Sarawak. Some of the development projects being implemented in the states include the Northern Corridor Economic Region's Infrastructure Facilities Project in Perlis. Other projects are the PPR project in Sabah, as well as SCORE project for Integrated Agro Park with Dynamic Modern Farming in Sarawak. The 1.66 million barrels per day voluntary output cut by the Organisation of the Petroleum Exporting Countries and its allies, OPEC Plus, was a positive surprise as the market was expecting the status quo to be remain. According to Maybank Investment Bank, OPEC Plus has continued to play its role as a formidable swing producer and remained a very much disciplined pact collectively. The firm is keeping its oil price forecast unchanged at $100 a barrel for 2023. Oil prices could sustain above $100 should OPEC Plus take a stand to see an elevated oil price policy over higher output. This would further tighten the global supply market, which is already being affected by the prolonged structural underinvestment and rising demand outlook. That's all the time we have for Bizworld. I'm Nadia Azmi. Thank you for watching and keep tuning in to TV3.